Good afternoon. This is Tom Alexander. It is Saturday, November 25th. This is the weekend update for next week for Monday, the 27th. And we're pretty much in suspended animation. We have been in vertical development now since the end of October. It has been relentless. We're basically having a crash to the upside. But I think that's quick. That's going to come to an end pretty soon, and we will, at a minimum, have a more two-sided trade. Um, I'm traveling. This is going to be rather short and sweet. So let's get into the charts. By the way, if you find value in this, I'd very much appreciate it if you would subscribe to the channel, if you would like the video, etc. Okay, so let me share my screen. And I'm going to start with the profile view, and I'm just going to cover the SPX because the SPX is the common denominator among all four of the indices. If there's any significant move, everything is going to move in lockstep, and the SPX is, again, the other indices will follow the SPX or vice versa to the larger degree. Okay, so what you see here is the profile view of the month of each one of these profile units is a monthly auction. We're in the November auction. The November auction has been extraordinarily vertical. There's been very little horizontal development. It is increasingly overdue. That does not mean we don't spike up again. This is one funky structure. I talked about this in last weekend's video, and I invite you to go back and review that. It's on the web page below this one, alexandertrading.com weekend update. But what you're looking for now, even if we spike up, you're looking for a more vertical development. You're looking for more horizontal overlap in price. And then let's take a look at this view. Now, what I'm going to show you now is the very clear. This is shorter term. These are individual day sessions. This is your classic 30-minute profile view. If I were to combine each of these units that I have highlighted here in the light blue horizontal bands, you'd get that Gaussian profile because each one of these represents an auction. Here, I'll just do it for you. And what you see here is a very clear migration of value higher. And then we had Thursday's trade and then some funky trade on Friday, but you have a very clear migration of value higher. Now, when this switches and you begin to take out these lower levels, then that's your initial signal. A top is likely in place. Okay, let's take a quick look at the internals. And what you see here, the red line is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of advancing issues. The blue is breadth, NYSE closing breadth. The 10-day moving average of NYSE advancing issues is at its highest level that we've seen since last July, close to the top. Now, I'm not suggesting that this means that because of this, it means we're close to a top. We may or we may not be. Now, we are certainly close to the summer highs. This is around 4607 in the SPX. So that I would expect noise around that level if we spike into that level. And that's where we are here. Now, let's take a look at something a little more perhaps tradable. And this is a 30-minute view of SPX, and below it you see breadth. This is NYSE breadth. Now, bull legs have a very, very, very consistent personality. The price breadth personality of a bull leg is exactly as you see on the screen here. You have a series of higher highs and higher lows. The blue horizontal line are the higher lows, and you can clearly see the higher highs. And then you have breadth. This was an extraordinary momentum peak in here. I don't think you'll see that exceeded. If we were to see that exceeded, it would be unusual, and it would be very bullish. Now, I would not be too surprised to see a spike up somewhere between here and this level again. And what we want to be looking for as traders is to see when this pattern begins to fall apart. And what that will entail, it will entail the market getting down into this level, breadth getting down, the internals getting down to this level, and then not immediately bungee jumping back higher as it has been doing every time it has reached this level since this rally began back in October. And this is a pattern that I have followed for years, for decades actually, and it's very dependable, very reliable. Nothing can be rote traded, but this is a very reliable pattern. On the converse side of that, if we do spike higher in here, and who knows where breadth goes, if we go up into this 4,600 plus level up in here, that's probably another short-term high. So that's something to keep an eye on Monday. We'll see what happens. I hope you guys enjoy the rest of your weekend, and I will be updating.